Hello and welcome to the Pipnotic Symposium for the 17th of October 2017. So the agenda today is going to look a little bit something like this. Some updates from Pipnotic. We're going to talk about trends, limit orders when price is strong. What do? Do you leave them in? Do you take them off? We're going to have a look at currency strength. Then we have a few final words that I'd like to share with you before we wrap things up for today. Okay, the update. Well, a lot seems to be going on at the moment. As most of you have seen, we have created a new website which has been launched, and we've been running that for about a month and a half or so now. And I really like the new website, especially the back end. So the memberships and the subscriptions, the whole process has been streamlined, which makes things a lot easier for us and my bookkeeper. So this enables us to kind of streamline the business a little bit, so we don't use so much time on doing back office stuff, which is really boring if you ask me. Then we have the introduction of a new tool. And so the new tool that you may or may not have used yet is simply a tool called multi-intra candles. So I'm just going to show you very quickly what that tool looks like. So if we go to a chart, we'll go here to the the pound US dollar, and if I attach that tool to the chart, multi-candles, you can see it looks like this. And why is this a really cool tool? And I say a really cool tool because it's a pretty phenomenal utility for obvious reasons, some of which you'll see in just a second. Well, here we are on the 4-hour chart, and despite this fact, we can see daily candles and weekly candles. And you'll notice that the color coding is the same for this tool as is for the supply and demand indicator. So there's nothing new to learn in that regard. And the reason this is a great tool is because we can see that, well, obviously we can see what's going on the 4-hour chart, but we can also see what's going on the daily chart and also the weekly chart. And this is a really nice example here, where you can see that we had price was accumulating for a while, so we formed this base. This is a weekly chart here, focusing on the weekly candles. So price went down, and we accumulated here. We gapped up, we accumulated, and then we had a price imbalance, the point of origin for which was down here. Okay, so during this weekly price imbalance, which is very nice, within that we had another price imbalance, a daily bar left from the same weekly area of demand, also daily demand. Then we had a continuation pattern within this weekly candle. So we had a rally, accumulation, and rally. And so you would see that we had a lot of strength, a lot of buying going on during this week. And if you have a look here, you can see that we have a very nice continuation pattern on the daily charts. You would simply draw the rectangles like we normally do from the high of the highest body in the area of accumulation to the lowest low, which goes from here to here. So this is where our area of demand would be marked off, and our entry would be at the top, of course, and our stop would be just below the low of accumulation. And this is where price came down nicely and had a bit of a bounce. And so if we have a look at opposing areas here, you can see again we had another one of these price imbalances on the weekly candle, on a weekly chart. Price went down, it accumulated, and then it shot down again. This is what moved into this. Keep in mind that we are making higher highs on the weekly chart, so we will be going against the weekly trend. But that doesn't mean you can't take these. And if you have a look in here, you can see that we have price sold off, and we accumulated for 2 periods, and then we sold off again. So what we would do here, we would do something similar. We would have the low of this to the high, which would be like that. And so this would be our entry to sell. We would sell at the low here, and we would have our stop just above. And price went in there, and we had a bit of a bounce. We went down to this daily accumulation, roughly to the close, and this is where price reacted and moved through. So here we had about a 1.5, despite the fact that we are against the weekly trend. So I hope you can see that this is a pretty interesting tool. I don't recommend that you put this on top of your supply and demand chart, because things will get really cluttered and ugly. So, but I do recommend that you perhaps leave it on one of the charts then you can simply drag symbols over onto this chart when you want to do your top-down analysis. Anyway, it's just a kind of a shortcut, a very quick way to perform this top-down analysis where you can see what's going on these major time frames. And so what I've done is I've set the graded period multiplier to 1, 2, which means the current period plus 1 and plus 2. And so now I can see my entry time frame, which is the 4-hour chart, plus my medium term, which is a daily, and my longer term, which is the weekly. And so we want to position ourselves in the direction of the long term, which for me on this chart is the weekly, and we want to be buying at 4-hour/daily areas of demand. So you can do this on anything. You can go to the 1-hour chart, for example, and it's going to show you, of course, 1-hour price action, as well as 4-hour candles and daily candles. So if you're perhaps a little bit more shorter term, well, you can do this as well, because you're seeing all of your time frames at and around this area. So you can see here that, price is going down on the daily chart. If we zoom out a little, so we see a little bit more information, you can see again that we're making, well, this is what we saw on the weekly chart, where we have a high, then we had price trading above this high here, which says that we are looking to potentially move higher, depending, of course, what we're testing, what supply we're testing here over to the left. So you can simply take this information with you to your supply and demand chart, where you are ultimately going to be looking for areas which to buy and to sell. So anyway, give it a shot and see how you get on. If you have any questions, please don't hesitate to get in touch with me about it. Okay, so that's the new tool. Then we have the new version of the supply and demand software, which is coming along. It's a really slow process, and for that I apologize, but it's coming along. We are ever so slowly progressing. I used a whole month for negotiating price data, which was really expensive and very difficult to find. But that's done, and so now we're into kind of the hardcore development, and things are progressing nicely. And we're also rewriting the engine of the currency strength indicators, and so now we are going to have a weighted currency strength. And so instead of weighting all of the currencies equally, for example on the dollar index, we'll be weighting these properly, which should give a much more accurate representation of the actual strength of the given currencies. This is, of course, takes into consideration major or primary trading partners for economy. So this will be really exciting. Okay, and down here I have the reintroduction of GFX. I have decided to reintroduce the graphics version of the currency strength indicator. A lot of people have been asking for it, and so this is what I'll do. And just give me a few weeks to get that done. I have a lot of stuff I have to prepare in order to do that. And then the last point here is I've decided to leave Forex Mentor. I've been there for a couple of years, and it's been good. I think it's time to come back to Pipnotic. I'm leaving as of the end of this month. This is my last month there, and I'll be bringing all of the Pipnotic software back to Pipnotic. Okay, trends. Trends can be a little bit difficult to assess, and why is that? Well, that's because you can easily get mixed signals depending on the time frame that you're looking at. So assuming that your long-term time frame is, for example, the daily chart is going up, your medium term is the 4-hour, and your entry time frame is the 1-hour. What if these are all moving in different directions? What do you do? Well, the most important thing is that you must focus on the long term for your trend. So if we go back to the chart here, where are we here? We have a look here. So the long term is our daily chart. What is this doing? Well, it's very clearly moving higher. Why? Well, we have some supply in here that I know on a small time frame. It's been tested once, twice, and now it's been cut through. And so the origin of this move is what is responsible for breaking that. And so supply is being consumed, demand is being respected. How else do you know? Look at the software. Where do we have the boxes, these rectangles? Are they above or are they below price? And you can see very clearly that they are below price. And the closest one is all the way up here. And so there's ultimately free sailing until we reach up here. We're probably going to run into some resistance when we get around here. But there's plenty of room until we do get there. And that's at the big figure, the 1.4. And so keep that in mind and make sure that you align yourself in line with this daily trend. So you can go to the 4-hour chart, you can see, well, it looks like the price is going down. Does that mean we're in a downtrend? No, it doesn't. It means that we are having a pullback. The hourly chart, you can see that it looks like we're really kind of moving down, and so most people would be inclined to start selling, which will definitely work, but you have to know that you will be trading against the major flows, which are to the upside. And so ideally you want to be picking nice areas of demand that are going to move in the direction of the daily supply and demand imbalance. If we look here, we have, what do we have? Where has price been back to so far? Well, it's been back to this here. This is what we tested. Tested it once, the 130.50. And this is interesting because when price managed to, we had a trend line break. Let me put this on here. We had a trend line break here. And now this is gone. What area caused the trend line to break? Well, it's this one here. And what area of demand took out this supply? It's this one just here. So this is the one you target for an entry. And this is the one that has been tested. Now we have this one which is still in play, and so you could of course consider to buy at that area again, but you have to keep in mind that it has been tested, so it is no longer a fresh area. So you take this information, you can see on the 4-hour chart that this is the area that price currently reacted at, and if we think that this is one is going to hold for a while, well then you would buy pullbacks, because you know that price reacted this area of demand, which looks pretty mediocre. You can see there's a lot of trading in the area, so maybe price is going to have another test to move a little bit deeper and potentially even start to look at uncharted waters, which are around here, the low of the test and the beginning of this area of accumulation, which is the big figure here. And so this could be an area that we could consider to trade once price comes back down here. Market flow is moving against us. Does that mean the trend is down? It doesn't. The trend is still up. And so what you would do is you would just look for nice fresh areas at which to buy. We have this one here, which has been almost tested, not quite. And so you could have a closer look at this area in here and potentially take a stab at that. It's a very tiny pip risk, and so it could work out nicely for us. Keep in mind that this is the beginning of the buy zone for this 4-hour area of demand. Rally, accumulation, price left, and this is kind of where price is starting to see a lot of bullish liquidity. This is where it entered the market. So just keep that in mind. So just to do a quick recap, you do your top-down analysis first. You go to your trend time frame, your long time frame, your longer term time frame, and you see what direction it's going in, and you trade in the direction of that. So even on the smaller ones it's going down. It doesn't mean we're in a downtrend. It just means that we're having a pullback in relation to our longer term time trend. Okay, good. Now we're going to look at limit orders when price is strong. What do you do if you have something like, okay, price was up here. We had an area there, nice area of supply. What do you do if price is racing towards your entry like this? When do you take the order off, or when do you leave it on? Well, this depends, obviously. But the strength information might be showing you that, for example, this area of supply is not going to hold because the strength is strong. For this pair, the Australian dollar is much stronger than the American dollar. Well, that means that there's a demand for Australian dollar and supply of American dollar. Doesn't that mean that this is not going to hold? It doesn't mean that, because when the currency strength will often change once price reaches an area of supply and demand. There are people buying, and often you'll know that when price reaches an area of supply, a lot of people are still going to be buying because it's so high. And so this will not, the change in supply and demand will not be reflected in the currency strength. And so what you can do is you can, if we use this as an example, we can go to a smaller time frame. If you want to wait for confirmation, then you would look for divergence. So you can see here that price is racing north really quickly, but we're not. You can see that we aren't really moving a whole lot higher in relation to the strength. So the Australian dollar is not as strong as the American dollar as it is in price. So that means that we have this is simply price seeking liquidity, which is up here. You could probably go to the smaller time frame and see the same thing going on. I mean, again, price is moving higher, but the histogram is not really showing us that. We're only moving ever so slightly higher. So that tells us that we have a dwindling appetite to continue to buy the Australian dollar, American dollar. So this could be a warning that price is going to move lower. And you could either use this for confirmation, or you could just put your limit order, and you couldn't just leave it in there and say, well, I think it's going to hold. It's a really nice area, and I think that's probably the best thing to do. When you start to question supply and demand, well, then you're kind of questioning the whole foundation for the whole supply and demand trading model. This is a nice area of supply. Why? First of all, it's really high. This is kind of an all-time high, so your stop will be in uncharted waters, which is great. There will be a lot of people looking to sell once price starts to move up into around here. And also we had 2 periods of accumulation. Price rallied, accumulated, and sold off. Then price managed to move down. We managed to move through a lot of this micro demand here. We had, let's see where this is. We had this here. This is an area of supply at some stage, and it was taken out by this. So the origin is down here. So this one is gone. The origin of that move is here. Then price started to move through this micro demand here. We came all the way down to the lows here, and from here we moved higher, we tested, and then price finally started to move to the opposing side of the market, where we met a little bit of demand, which was down here. And so just leave the order in and take it. Unless there is big red flag news in front of it, you can leave it. And I find that if you're on the daily chart or the weekly and even the 4-hour, when you have really nice 4-hour supply and demand, the news doesn't do anything. The news is already absorbed into the market. And so, I mean, there's going to be a lot of interest in holding this level here. And so news will often, it won't just cut straight through it. It'll move through it, then we'll have a rejection, and then it'll have another go, an attempt to consume liquidity up and around this area. So just because the news is out, it doesn't mean that you should take the order off. The news will often take price to your entry, and so some days you might be looking at an entry you have, and price might be 100 pips away from it. And so the red flag news is actually what is required to get price to move up into your area. And this is great, because what happens when price moves very quickly? Well, it leaves a liquidity void in its trail. And so when price moves up quickly into an area, price is out of balance. And what does that mean? That means that price likes to rebalance. And so price will normally come, chase the lows down here to rebalance price before it eventually decides if it's going to continue and have another shot at this area of supply just up here. So my best advice is to leave it on. And if you don't want to leave it on, you can go to, I used to do this quite a lot, where I'd go down to, I'd put the dashboard on, I'd go to the 1 minute chart, and I would watch, let me put this on, and I would watch price show me that it's going to turn around at this area here. And you can see this where you have the dashboard on the left side here, and you'll see that the Australian dollar is going to be green and the American dollar is going to be red. And just wait for the 1 minute, the faster currency strength information to start to change once price pokes up into this area. And even though price went up and it left really quickly, on the 1 minute chart there's going to be plenty of time to assess if that area is going to hold or not. So mark off your area, go down to your 1 minute chart, and keep an eye on the dashboard once price pokes in there, and then wait for confirmation. Are we getting some nice wicks to the upside when price pokes into these areas? Is the currency strength in the smaller time frame starting to show us that there is indeed an interest in selling at that level? If so, then you can just click into the trade, or you can find a smaller micro area of supply that you can trade at and give yourself a much tighter pip stop. So that's what I would totally recommend for you to do. But try both. Try with the dashboard, watch price react to these areas, and then also try just putting on limit orders and see what happens. And again, very important, trust the levels. I mean, that the whole trading model is based on supply and demand, so you have to trust these levels are going to work. If you can't trust them, then you can't trade the supply and demand trading model. So just make sure that they are there. Okay, let's have a look at currency strength. Yeah, a lot of people are writing and saying, similar to what we just spoke about a second ago, where you have an area of, for example, demand here, prices going down towards it. We have a negative reading on the histogram. What does that mean? Well, that means that we want to be selling this, but not always. Notice that again we have this going on. I'll take from here. So we have divergence setting up. You can see that price is moving down, but currency strength is moving up. So that tells us that we have a declining interest in selling this currency pair. You can definitely buy at these areas, especially when you have something like that. This is telling you that this is probably going to hold. So you put your order in there, and you leave it, and that's just fine. So I'm often using currency strength for this. The histogram is a really nice tool for assessing if an area of supply and demand is going to hold or not. So I use it number one for this. This is probably the primary reason for using it, but I'm also using the dashboard as well to help me assess if an area is going to hold or not. You can use it to simply spot these really weak currencies that we might want to be selling and the strong ones we might want to be buying. You can see here very clearly that on the shorter time frames we have the pound, which is really taking a hammering today, and we have the Kiwi, which seems to be attracting some attention. So if we bring that pair on here, the pound Kiwi, pound, this is probably going to be moving lower in a hurry. You can see it really is, we're racing lower. So what does that mean? That means that you could position yourself short on micro supply. If you wait for price to pull back on this time frame, well then these are going to have changed by the time price gets there. But if you focus on what you see here and now, then you go to the smaller time frames, the 50-minute or whatever, and you find a nice area of supply that you want to sell at. And you can see here that we have an area that's kind of pre-qualified just here. Would I sell that? I wouldn't. Why? Because we have a huge wick here that's telling us that we have something here that is really holding price, supporting price. We go to the bigger time frame and look what it is. We can have this. We can see that we have something in here. So if we zoom in there and have a closer look, you can see that we have something here. Some demand's been tested once. This is the second test, 83.50, and so you might want to be a little bit careful. But the fact that it's been tested so deeply the first time, and this is the second test, I'd feel a lot more comfortable actually selling up here and seeing if price will move through that area. And so I'm using it a lot for that, very much. I'm also using it, if I see this, I'm also going to have a look on the smaller time frames, even smaller than this one, and see if we can find some really nice areas of supply to sell at. And you can see them, they're jumping out at you. And so if you're selling up and around here, assuming that we think this is a nice area, well then you can see pretty clearly that this really supports selling up at around here. We might have a trouble even getting past here when strength is like this, but it's definitely worth having a look at. And so I'm using it a lot for that, just to find out what's being sold and what's being bought throughout the course of a day. And also, I'm also looking at kind of the longer term stuff here, and I'm looking for the stuff that's in the middle. And what does that mean? Well, that means that we are in a range-bound market. And then I'll use this to identify currency pairs that are going to be trading in a range. And I'm going to be buying at the bottoms and selling at the tops. So just traditional supply and demand trading. But something else I'm also doing a lot is to buy pullbacks. So you can see that price was racing higher. You can see that we're buying, and so you're simply using this as a filter to give us a directional bias. We can of course see it in price, but we also want to see that the core driver for this currency pair is that the Australian dollar is being bought and the American dollar is being sold, and you can see that very clearly here. We see that we have a positive reading in the histogram, which means that we have a lot of interest in buying. And so you can take this information down to the smaller time frames if that's what you're more comfortable with, and then you can look to buy at demand. And we have a nice little area here. If we mark that off, let's see if that lines up with where we were on the hourly chart. Yeah, this is kind of the very beginning of that trend. So you have this nice little area of demand, and this is interesting because we managed to cause market structure to fail. We had, if you look at all of these, this is like a major swing high. You can see it here. And when price kind of rallied and we stuck to the level below the level at which this one is poking at, and you can see it rally, accumulation, and then it popped up. So we have market structure failure, the source of which is down here. This is the area of demand that broke this horizontal trend line. And so of course we have these horizontal and these diagonal trend lines, but this is just a really nice example of a horizontal trend line. So you would buy here, again being confident with the fact that we have a positive reading on this currency strength histogram. So this is just a really nice general filter for a directional bias and currency strength divergence. And so when you see something like this, this is really messy. You want to see price break above it. This is a range bound market. You want price to move out of it. And when that happens, we're going to automatically attract buyers. And this is going to give you a pretty early warning, and that's what we're having. You can see down here we had this positive reading. Price came down. We had a pullback right here. Then price started to move up from there. And the breakout happened just here, already when we had a pretty nice positive reading on the histogram. And so that's pretty much how I'm using this. I really like it, especially for this stuff. We have the area. Is it going to hold? Do we have any signs that it's going to hold? Yeah, we do. We have currency strength divergence at the level there. So I'll just put in my order to buy there. Okay. So then we looked at how to use it and when to use it. That's great. Then we have a couple of final words. Due to the fact that I'm stopping at a Forex Mentor, I will be getting my evenings back again, which is marvelous. So I've decided to do the symposiums at 9 o'clock Central European time in the evening, so 9 o'clock p.m., 2100 hours. And this is really good because I'll be doing it every Monday at the same time. So I'm hoping, because we're in the evening, I'll be able to get the Australians who will be up in the morning and the Americans who will be kind of getting on with their day to participate. I'm not sure if it'll work out, but you should get maybe a few more people in the room, which would be really, really good. And I think it'll be pretty exciting. I think I'll leave it at that for now. If you have any questions, please send them in. I got over everyone's questions, but if I left anything out, please feel free to let me know, and we'll have a look at that. Good stuff. I'll leave it at that. Thanks for watching.